Intel, INTC, is back in the spotlight after unveiling its new Core Ultra Series 3 processors at CES, the first chips built on its long awaited 18A manufacturing process. For many investors and tech watchers, this represents a make or break moment in Intel's turnaround story, real world proof that the company can finally produce advanced silicon at scale after years of delays and execution missteps. The new Series 3 lineup, codenamed Panther Lake, marks a major technology reset. Intel says the chips feature up to 16 CPU cores, a redesigned Arc B390 GPU with 12 Z3 cores, a 50% graphics jump, and a powerful neural processing unit capable of 50 TOPS, enabling AI inference to run locally on laptops without needing the cloud. Performance claims include up to 60% faster multi-threaded performance, 77% faster gaming, and as much as 27 hours of battery life on Lenovo's reference system. Intel also confirmed that these chips will power more than 200 PC designs from major OEM partners including Acer, Asus, HP, and Lenovo, with pre orders already open and full retail availability beginning January 27th. At the same time, Intel executives revealed they are developing a gaming specific processor and dedicated gaming platform, signaling a renewed push to win back gamers, a segment where AMD has dominated in recent years. For the Bulls, this is exactly the inflection point they've been waiting for. The launch demonstrates that Intel's 18A process is finally real and operational, a crucial step in restoring credibility and supporting its broader foundry ambitions. Optimists argue that if Intel can prove consistent execution, it could reestablish itself as a true competitor, not only to AMD, but eventually to TSMC, the world's dominant chip manufacturer. That optimism has been helped by the $8.8 billion US government equity investment last year, underscoring Intel's status as a strategic national asset. But the skepticism hasn't gone away. Industry analysts, including JP Morgan's Gokul Hariharan, warn that despite the progress, Intel still faces a steep climb. TSMC controls the advanced manufacturing market with deep customer relationships and unmatched scale. The firm expects TSMC to retain more than 95% market share at the 2 nanometer node, meaning major US chip designers like NVIDIA, AMD, and Broadcom are unlikely to shift production away. And even at the consumer level, data continues to show AMD dominating retail CPU sales, such as Mind Factory's recent figures, where AMD outsold Intel 10 to 1. That leaves some investors questioning whether Intel's comeback is more narrative driven than earnings driven, at least for now. So the community feels split. The bull case: 18A works, finally. AI ready PC hardware could spark a refresh cycle. US government backing adds stability and strategic leverage. Intel stock appears cheaper versus NVIDIA and AMD. Foundry prospects could scale over the next decade. The bear case: TSMC still dominates cutting edge chip making. Intel has a long execution history to overcome. Retail CPU demand remains weak. Competition in AI chips is fierce and expensive. Profit taking risk remains after recent rallies. Some traders see Intel as a value AI play, a way to participate in the AI boom without paying NVIDIA style multiples. Others view it as a defensive American manufacturing story, especially with increasing geopolitical tension around Taiwan. Either way, Intel is firmly back in the conversation, and expectations have never been higher.
So the extrapolation of its 3-day moving average is saying that this trend it picked up from the, I would say, from the 29th. It looks like the, okay, let's just say Boxing Day, Boxing Day of 2025. It's saying that they might hold it at least up till the 14th of January. Then after that, there might be a brief consolidation towards the end of this month, January 2026. Then after that, the uptrend may resume thereafter. Okay, that'll be good. Projections are currently saying, let's see what we have: 46.08, 50.33, 52.96. Momentum is expected to remain at least momentum is expected to extend towards Monday the 12th of January. Then after that, it may begin to wane, and there's a chance that by the Thursday the 15th, it may drop below its 10-day moving average. That moving average is rising at a pace of $1.6851 every day. Okay, let's see what we have on its 4-hour chart. On the 4-hour chart, it has given up some of the gains it picked up in this session. Yeah, and it's saying that some contraction. This contraction that is already playing out now. It may remain in place at least up till tomorrow. They close up tomorrow the 8th, and then after that it might bounce. So ultimately, it's just saying that it may consolidate at least up till the 15th of January. Yeah, but it may not. After that, it may resume the downtrend. Okay, here projections are currently saying 40.66. It's a downward projection. Momentum is not expected to pick up anytime soon. So maybe they are done with the news. Or rather, they are done with the expansion that has been in place since. As a matter of fact, here it's actually saying since New Year's Eve, Christmas Eve. That's when it's actually began to play out this expansion. But if you like as well, you could also see that there seemed to be a pattern that is playing out here. It seems to have completed a cycle, at least going all the way back to, let's see, you could say that he may have completed a cycle going all the way. So maybe you could say the cycle began on the 23rd. I mean, late September of last year, and has since completed as of one cycle has completed. Maybe completed as of Christmas Eve of last year, and maybe another cycle is beginning to play out. Well, we'll see how it goes. We'll see how it goes. Okay, so see what you make of Intel stock, and thank you very much for watching this video.